Hi, I'm Sharon Kreider.
And I'm Vern Hoven. We are here in the Western CPE studios in Bozeman, Montana. Today we're going to talk about the child tax credit and the advance payments of that credit. So Sharon, just quickly remind me of who qualifies for the expanded child tax credit. We don't want to spend a lot of time here because we have other questions to answer.
All right, so just the basics on our expanded credit. The first thing is we have an old credit still continuing. So that's the child tax credit that you put on the tax returns in 2020. It's a $2,000 credit per child for those with AGIs below 200,000 single and 400,000 married filing joint. This is an expanded credit. And this expanded credit requires the taxpayer to have a qualifying child. Just a little bit of change there on our normal definition of qualified child, which we've been using for more than a decade, and it's related to ages, and I'll talk to you in a minute on that. And the child has a Social Security number, not a TIN. The child has a Social Security number, and the taxpayer has a main home in the 50 U.S. states or District of Columbia for more than half of 2021.
So Sharon, how much is this expanded credit?
It was $2,000. Our base credit is $2,000. Now we have a credit of $3,000 for a child under age 18 and $3,600 for a child under age 6. Half of that credit is paid in advance beginning in mid-July based upon AGI shown on the client's 2020 tax return or 2019 tax return if you have the 2020 on extension and haven't yet filed. So those half of the credit is going to be paid over a 6-month period of time, July through December, and then reconciled on the tax return.
The advance is paid based upon an income threshold. What is that?
Well, we already know that when I call it the old credit and the new credit, the old credit sits there as a base up to the AGI numbers on that. It's actually a 2-step phase out. So the bigger credit, the expanded credit, is available if the client's AGI is below 150,000 married filing joint, 112,500 head of household, 75,000 single. The child tax credit, this extra credit, does phase out by $50 for every $1,000 by which the AGI exceeds those threshold amounts. So that's the threshold. And IRS uses the numbers from the 2020 return to determine that advance. The actual 2021 AGI determines the real accurate credit. And don't forget, different than all of these economic impact payments the clients received. Here, the excess advance must be paid back when the 2021 tax return is filed.
How can my client get the benefit if their child was born in 2021, or if they gain custody of a child in 2021?
This is good news. The IRS has created a tax credit update portal. And this portal is going to do all sorts of things, but it does allow the family to go in and tell the IRS about children born in 2021 or about changes in child custody. It could be that you and I are divorced with a child and we claim the exemption by prior agreement every other year. So in 2021, it's my turn to claim the child. I can actually go into this portal and say I have a child in 2021 that didn't show up on my 2020 tax return. So the portal is at the IRS website.
Can my clients opt out of this monthly payment concept?
Well, they can. So you might opt out because the client would rather claim 100% of their child tax credit at the end of the year when they file their tax return. If they would like to have the whole credit, or they're not certain what the credit will really be when it's reconciled on their real 2021 AGI, they might like to opt out of these periodic payments, again, on that child tax credit update portal. You know, I'm sort of stumbling over child tax credit update portal, right at the IRS website. If your client is married filing jointly, their spouse also has to opt out. The opt-out or unenrolling applies to the individual only. If only one spouse goes in and opts out, the other spouse will get a half of an advance. So you could actually, I don't know that you and I would feel like doing this as tax preparers, you could actually modify or mitigate what that reconciliation might be by opting out of just half on an individual, on the married filing joint return.
Should my clients opt out?
Well, that's the real question, isn't it? So let's say we know that the client's 2021 income will be far above the thresholds. 75,000, 112,500, 150,000 are those thresholds, those AGI thresholds. So on the 2020 tax return, my clients, they were suffering from the pandemic. Their AGI is 150,000 and they have a couple of kids. So they are entitled to, based upon that, a $3,000 each for their two kids, they're 10 and 12, a $6,000 credit. So they could be receiving advance payments of $500 a month for 6 months, half of their credit amount. But we already know that 21 is better than 2020, and they could opt out knowing that they'll never qualify and they would have to owe back the $3,000 advance they received out of the $6,000 credit it looked like they would be entitled to. They don't want to pay it back. So then they could opt out. A lot of clients who just would rather not pay the IRS a dollar. And yesterday when we were talking about this, you said, yeah, but it's an interest-free loan. Yes, it's an interest-free loan. It's pretty hard to get those. It's an interest-free loan for $3,000. That's fine. I have clients who go, yeah, I'll take that money. But I also have clients who don't want to pay it back. They'll have spent that little bit of extra advance each and every month, and maybe not on food and lodging, but on the Disney World trip. So that's one reason. They already know their income isn't going to qualify them, and they would like not to owe money back next April. The other is the client has a good financial situation. They don't really need the money right now. They don't need that extra. In our example, 2 kids, that extra $500 a month, and they'd rather have a bigger refund next April. You know, I could say to them, but the government has your money all that time, and they'll say, yeah, I'd still rather have it next April or next February or March. I'd like a bigger refund. So I think there are reasons that the client might want to opt out. I'm not sure, Vern, that our client's going to come to us and say, you know, can you help me opt out, or should I opt out? I think instead there are going to be some surprises as the clients find out that this isn't like the stimulus payments they were receiving, that they have to pay this back if they receive too much.
My client changed their bank account, or now they want direct deposit. Can they go to the portal for that?
Yes. This portal is designed to, first of all, update my bank information. I went from Wells Fargo to Bank of America. On my 2020 return, my direct deposit was to a different bank. I can change that on the portal. I can tell the IRS I don't want a paper check, because after all, these checks are going to come, or the checks might come monthly. They'd rather have a direct deposit every month. That's on the portal. So the portal is designed to check about and to change the things that affect the amount of the advance payment, such as a change in the number of kids or marital status or income. So you can opt out any month. There are dates for when you can opt out. You can opt out for the August payment if you opt out by August 2nd. So portal is designed just for this.
Will my clients continue to get monthly payments next year?
Oh, dream on, dream on. Maybe, but that's a really, really big maybe. The American Rescue Plan only expanded the child tax credit for 1 year, 2021. President Biden has proposed extending the expansion through 2025 as part of his American Families Plan. Democrats hope to make the program permanent. The loyal opposition has been saying everything is too much money, hold off, and we'll talk about it. So Right now, this is only 2021. The advances are through December, about mid-December, and then they will stop, and there'll be a reconciliation of those advances on the 2021 tax return.
You know, Sharon, I think that the clients are going to mix up the economic income payments and the child tax credit advances. I bet they yell at you, not me.
Maybe they yell at us.
Yell at you and me when they have to pay back those excess child tax credit advances next April. Sounds like we'll have another thrilling tax season. Well, I'm Vern Hoven.
And I'm Sharon Kreider. Thanks for watching us.